Recording. So before I launch into it, are there any questions that anyone has on the filter formulas? A couple of you were at one of their two of the previous workshops. No, okay. So let me get started then. Let me go to spread profiles. What do you guys think of the new look? Do you like it better? Is uh, is it easier? Do you think it'll be easier to navigate around? Anybody?
For me, it's perfect.
Yeah. Okay. Is that Paul?
Yes.
Hi. Okay.
Hi.
Okay. Um, so I added a couple of new features in here to help make it easier to write these filters. First is I'll go back to my example DBE sigmas. I added some highlighting, some color highlighting, so you can see different what the different pieces of the formula are. And really, the most interesting thing is let's create a new formula. We'll call this, I'm just doing something in naked puts here, workshop 3. Okay, so I created it and it automatically started with the and in there. So you get a starter, something to start up right away, and then you can, instead of starting typing or trying to do the point click with the help screen, you can either start typing or click control space, and a list of the possible selections for this profile comes up. And you can just click on the one that you want to put in there. So let's say I want to start with the number of days. Oh, I'm in calendar spread. Oh, number of calendar days here. Okay. So I double clicked on the number of days and I can say, days less than or equal to 45. And and then maybe I want the expiration date. So I just typed the EX, and it comes up with the two or the three uh, possible completions that start with EX. I'll click enter. I want the expiration date to be prior to the next earnings date. So I just typed the NE, and it filled that right in for me. And so then you can move along from there. And again, I'll press the apply button, and I go from 13,000 down to 1,200. So I'm really cut a lot of things out already. Um, and then my favorite, the annualized expected return, greater than 15%. I want, let's see what else. Oh, the probability of closing above, whoops, at expiration, greater than 80%, whoops, 80%, let's say, and I get nothing. That filtered it down real quick. So let's go back to that and see what we get there. Okay, 457. So let's lower that probability. Let's do the downside break even, greater than 50%. Well, they're all greater than 50%. 75, let's try. All greater than 75. Did I type that wrong before? Oh, that's the DBE. Hmm. There we go. I narrowed it down. But anyway, so that's the new autocomplete feature. Um, does that seem to be make things easier?
For sure.
Yeah, Alexis, this is probably all new for you. I think probably the last time you saw it, I didn't even have this filter editor here. You probably had the one line thing on the top. Am I correct?
Yeah, yeah, that's correct.
Yeah. Okay. Um, so there's a lot of new things in here for you. It's all the same. Actually, I've added some columns, but it's basically the same filter syntax. Um, one of the really cool things now is the earnings that you can look at. Oh, I've also, speaking of earnings, um, let's go look at something here. Apple announced earnings. Oh, there's also an autocomplete on here. So I type in the search. I just typed A, and it popped up with everything that has A. Now I type AAP, and I see Advanced Auto Parts and Apple. Um,
Mm.
so if I go to Apple and I go into I'll go into the volatility study, and I can mark the chart with the earning announcements. Um, I have the whole history of the earnings in there. Let me go to 3 years. So if I click the volatility details and click add earnings, now all those dates are there automatically. Let's get rid of those two. Some missing data back then. And it automatically pops those up on the chart so you can mark them. And I'll be working on an earnings report that will do an analysis of how the stock behaved after that particular earnings announcement, and you'll be able to see how much what the greatest move was in percentage terms and in terms of standard deviations, and a bunch of other information around earnings. But this is really a filter formula workshop, so
So is that going
let's
to be a
focus on
certain
that.
number of days before earnings and after? How's that going to work?
The earnings report.
Yeah.
Um, well, it'll tell you, basically based on the day after. So, for example, here in
Oh,
Apple,
okay.
all these things are after after the close. So
Mm,
it'll tell you. It's going to tell you what the previous close was. You'll see the open, high, low close for that day after. So that'll give you an idea of if it gapped, did it move around a lot that day, and then it'll tell you for each of the earnings announcements whether it was an up move or a down move, how much it moved in dollar wise, percentage wise, and in standard deviations based on one of the three historical volatilities, and then you'll be able to change that and see how those moves compared with different volatilities
mm,
and
okay.
some other information. I'll It's a big secret. Want everyone to be surprised. Um, so you're very quiet. You've been at the workshop before. So do you have any specific questions that you would like to answer?
Not at the moment, thanks.
No. Okay.
Great. I'm trying to follow you with the application. I have it open on my screen. And is it possible that the version that is online is not having this automatic filling feature yet?
Um, yeah, you got the one off the strategy zone.
Yeah.
Yeah, that's not hasn't been released yet. This is actually I just since the last workshop, which was 2 weeks ago, I added this feature, and
Okay.
it's just in the last couple of days that I put it up on the beta site. If one of you guys is interested in using the beta, I'll be happy to let you use it. But I just there's a caveat. There are no guarantees with the beta version because I'm playing with it often, and sometimes I put a version out there and it doesn't work, and I'll have to go back and fix it. Um, but I don't mind if you don't mind. I don't mind. Uh, if you want to use the beta version, then you can be on the cutting edge of option workbench dumb.
That would be great. We can test it.
Right. Yeah, that'll be good. All right. So Alexis, you're a volunteer.
Ah,
Okay.
fantastic.
All right. I'll send you the link after we're done. So those are really the new features since the last workshop. I guess we can open it up to other types of questions also, since I'm here.
Craig, how do you access to, I will call it the bubbles,
The
volatility
bubbles.
bubbles? Yeah,
The
how do you
bubbles.
access to that?
Okay.
If I can.
So now I'm in the volatility study. I went back to Apple. I marked all these earnings dates. So here we're in the volatility history panel. If I click the price composite IV link, here I am at the bubbles.
Okay, can you repeat that what you said?
Sure. When you first open the volatility study, you're in the
Okay.
volatility history. Okay.
Yeah, okay.
Now if I click on the price composite IV trend chart, more affectionately known as the bubbles, I get to that screen, and then I can go in and add the different days. So this is actually, I think, Lee, you asked. This is another way to look at what happens to price and implied volatility
Oh, okay.
after an earnings announcement.
Yeah, okay. So it'll help having those populated, because before you had to go in and select.
Yeah, it was a pain in the neck.
Yeah.
I'm the first to admit that. Yeah, so let me zoom out a little. Right, so here I have these days going back to 2010, January 2010. So what I did was this day would be the day after the earnings announcement. So Apple announces after market close. So the earnings were announced on the 25th after market close. So all the action happened on the 26th. And then I put a couple of more days after that to see what it does after that. Because actually I have a trade on Apple today for today's earnings. I'm hoping it comes back in a little bit, but it doesn't look like it might do that. So that's.
So do you find that? So one thing I've noticed is, it's like the same thing. Past performance is no indicator of the future. And then so you can look at all this stuff, but you don't, just because it was like that in the past doesn't mean it's going to be like that in the future.
That's true.
So have you found
absolutely true.
that there's some correlations between the past and present or future?
Well, I mean, if I just look at these bubbles, I would say, okay, Apple, it makes a move and then it kind of hangs around in the area where it where it gapped to. Right? These gaps don't look huge here, but because there's such a large scale on this, because the price moved quite a bit since the beginning, since January of 2010. It was down around 200, and now we're up in the 500s. So sometimes there is, sometimes there isn't. There's one that I trade a lot. It's for earnings, CHRW. I'm gonna give away a trade secret here. If I'll put the bubbles up for this guy, and you'll see. This one's coming up soon. Next week, so I gotta be ready to put this trade on. Like I said, I really need to do that. I have to see why I don't have those dates. So this thing, did I want that? No, I wanted that one. Okay. Lately this guy just moves down all the time. Here's one that was up. This is back in 2011. Um, but if you see this thing goes down after every earnings. Um, so this is very highly correlated, and I've been doing this since for the last year and a half. The first one I did was February. This might have been my first play on that, and I just basically what I do is a directional butterfly on this guy. So I pick a strike that's 250 or $5 down, and then I just do a butterfly, and it
Oh, okay.
works out really well.
That's kind of interesting.
Yeah.
So if it does it again, you're okay, but if it goes the other direction, then
Yeah, but
rarely.
with a butterfly, and I think, does it have weeklies? No. But yeah, with the butterfly, you're usually pretty safe. I mean, especially when the volatility. So what I'll be doing is trading you know, these May options. Um, so it's 57 and a half. So I'll probably do a 50, 50, 55. I don't know. I'll have to see when the time comes. But
Mm-hmm.
when you have this big kind of skew here in the options, you get you get a lot of money for your shorts, so that the butterfly isn't that expensive, and then it has a lot of volatility crush
Yeah. Okay.
after the earnings
So
announcement.
you're putting on like the day before earnings
Yeah,
announcement?
yeah,
Okay.
yeah. I think
Okay.
this is a BMO.
It's like one day.
Yeah, it's a 1 or 2 day trade tops. It's AMC. Yeah.
Oh, okay. And then, sorry to ask this again, but to populate the earnings dates, was that from tools or where were you doing that?
Sorry, that was
Oh,
from
volatility
volatility
history.
details, right? And then I just
Oh,
click the add earning.
add
I'll
earnings date
change that to a
right
to
there.
a regular button.
Oh,
Um,
okay. So it's just
so
text right now.
well, it is a button. It just doesn't look like a button.
Oh, okay. And
So that's why I'm
this
going
is
to change
only
it.
in this new version 3.1?
Yeah, yeah.
Okay.
Actually, I'm going to call it 4.0, but
Oh, it's going to
that's
be called 4.0?
yeah,
Okay.
yeah. But that's just because of the new look, and I changed the whole layout of the with
Okay.
the menu
When
up
do you
here
think
instead
that'll
of
be out?
couple of weeks tops. Yeah, because because Paula, I'm previewing it tomorrow at the eMoney show. So I'll be talking about it being released. So there's nothing like a deadline to light a fire under you.
Oh, okay. Yeah, I got to look at that. What time is that going on?
That is 2:40 to 3:10.
Okay. I think
And
I signed up for that, but somehow it's just like a general thing.
well, yeah,
I
you
don't
know what
have it
they
in my
do?
calendar.
They have it's one long webinar. It goes
Yeah.
from 9:30 in the morning until 4 in the afternoon or something like that. And then when it's your time to present, like I have to sign up as an attendee, and then when it's my turn to present, they're gonna make me a panelist or whatever, and then I'm gonna do my spiel. And
Okay. So it's 2:40 to 3:10 Eastern time?
Eastern, yeah. I think it's gonna be recorded as well, so
Okay.
you should be able to find it on the eMoney Show website. Okay. Any more questions about earnings or filter formulas? That's why we're here. What other cool things can I show you? I also have this formula for post earnings. So this one will tell me what's coming up next week. Um, so you can compare the earnings to to dates, and you can put a date in as in this format. That's how Option Workbench shows dates. Or I could also put in 2014, 04, 28. So those are equivalent. Um, and then I'm sorting by the earnings date, so I'm seeing what's coming up really soon.
How far in advance do you get these earning dates?
Well, I have three online sources that I'm using, and basically there's a batch job that runs every night, um, that goes and to the three sources and finds all the earnings. I think I do like a 6 week rolling window, um, and then it puts them in a database, and then the one that you see here, I think it says on here, um, the one that you see here, well, the green check mark means that two out of the three sources agree on the date and time. And if they don't agree, it picks the earliest one.
Oh, okay.
Okay, so where and BMO is before AMC and NA is before BMO. So if it's not available, that means the time is not available, or
Uh-huh.
the I can't. There's the two out of the three sources don't agree on the date
Yeah.
and time. So I just
Okay.
pick the soonest one, so you don't get caught with something
Yeah. So you
after.
probably want to double check because I noticed some discrepancies from different sources, like you're
Yeah,
saying. Right?
yeah, yeah. There are a lot of different sources, and they say a lot of different things, and there are actually sources that you can pay, but they're very expensive. Um, so there's my buddy CHRW.
So this post earnings crush, is that a standard filter now or going to be?
No, but I can. Well, it'll only work in this new version,
Yeah.
because
Uh,
the current version doesn't have the next earnings date, and obviously doesn't have the date comparison.
Right. So you'd have
Um,
to set that up yourself.
yeah, I
I
mean,
guess you could make it a
if you want
template.
to do a beta test, and I can I can actually add it to your filter, to your account, because
Hmm.
it's all in a
Okay.
database, so I can just copy from mine to yours, if that's what
Okay.
you want.
Yeah, maybe I'll do that. I actually have to sign up again, so um, but I might have some time to work on it.
Okay.
Okay, I'll think about it.
Okay. Let's see. Do I have any other good ones here? What else can I say about the filter formulas? Do you think the colors help in reading it?
Yeah.
Yes.
Oh,
Yeah. So the blue are kind of reserved words. Numbers will come up in that, I guess, purplish color, and commas and parentheses will be in red. Um, the
Yeah.
operators are, I don't even know what color that
Yeah.
is.
Color helps a lot.
Yeah. Um, what else can I
Craig,
say? Yes.
something so silly, but how I do not use the filters. I did selected one and I want to unselect it.
Oh, okay. So let's say I'm on this one, and you want to unselect. You want to see everything.
Yep.
Okay, just click Show All.
Okay. And you were saying that you use three data sources,
Right.
but for the closing
That's
prices,
that's
for
well
the day.
the three data sources are for the just for the earnings dates.
Oh,
Um,
and the intraday is
Intraday, it's a different data source. The base subscription now comes with 15-minute delayed quotes.
uh-huh.
So if I go back to let's say I go back to Apple. So these, it closed at 524.75 today, and this is what the volatility uh, skew looked like, and the
The,
price.
the, the composite, it agree with the Macmillan data, right?
Right, this composite IV is actually from yesterday. It's from the close of business yesterday. So the composite IV and IV percentile are as of close yesterday, but this close price is what it closed at today. And then during the day, the chart will change. These volume bars will change. It's a little bit crowded here. Let's go to 490. 570. I know it's
just
like
to fully understand the scope. I mean, in the intraday, prices, of course, might be delayed or might be online if you pay the $15 subscription for online data. But
correct.
the composite is calculated on closing prices, and it does match with the data from Macmillan.
Yes.
It's extracted directly. Okay. So
yes.
you do not recalculate it.
No, that's kind of an expensive calculation because you have to look at all the options and do that. That would take up a lot of computing resources to recalculate that with every tick or even periodically. Um, so and um, it's a proprietary calculation that Larry uses
Okay.
that he hasn't shared with me yet. Okay.
Greg,
Yes.
one of your filters you have is for cheap options. Is it possible for you to post it on your website?
Sure.
Yeah.
Do you want me the cheap options? Do you want me to? Actually,
Yeah.
that's one of the starter filters. It should be
Yeah.
one.
I couldn't find any on my when I open your website.
Oh, it should come it should come with your subscription. You didn't get these starter filters?
No, I didn't get them.
Okay, I'll copy them over to you when we're done tonight, so
Okay,
you'll
thank
have
you
them.
very much.
You'll have them. Yeah, you'll have cheap options, expensive options.
Yeah. Okay,
Um,
thanks.
and if you want other ones, just you can let me know. That's actually somebody suggested it at one of the other um, workshops that I have on the website, a place to share filters or in the application, which is a really good idea. And I'm going to be working on that. I'm not sure exactly how to do it yet, um, but I think it's a good idea, and I'm happy to share the ones I have. Actually, I still like my for naked puts, and I don't always do sell puts with this, but this DBE Sigma's filter has been working pretty well for me. Um, I think I went over it on the last time, but I want to sell stuff that that's before the next earnings. Um, the DBE Sigmas. Let's see. We'll pop that up. DBE. No, I don't know. I should fix that. So there you go. And then you can also resize this window um, and scroll around in it. So that tells me how many standard deviations below the stock price the downside break even is. Because I like when I'm selling puts, I'm not selling them because I think I want to own the stock at a lower price. I sell them for income. Um, I don't like owning stock. I think all stocks are dogs, but that's just me. Actually, I did something from here today. I did an IBB. Um, I might as well walk through this. There we go. So I looked at this 210 put, and well, first of all, it had the negative expectation at the historical volatility. I think it used the 42. Um, another actually before I let me go back to something else. I don't know if I showed you guys this in the probability analysis. Um, you can now include or exclude earnings dates in the probability analysis, which is it makes a big difference sometimes in the annualized volatility. So if I look at 5 years worth of Apple earnings, so I have a 35 and a half annualized volatility on that when I have earnings dates included. If I exclude them, it goes down by almost a full percentage point, and changes the shape of the probability density and also the cumulative density, and that will affect the probabilities on the on a trade that you're going to do. So let's just, for the heck of it, I'll show you how that works. Let's just say for ha-has, I'm going to sell an Apple put. Do something that's way out of the money there. Okay, one is good enough. Okay, so I mean, this thing has a nice positive expectation, and that's on the normal probability density. So if I go to 5 years on the fat tail, I'll include earnings. Okay, so my expected profit is $163. Let's see, let's see if I exclude them. No, it went down to 162. So it does make a difference on the probabilities. I'm kind of surprised that it went down. As you can tell, I didn't prepare that example. I would have found one that where it went up. Oh, here I also added this price indicator here. Kind of gets lost when I move the cursor around, but that'll change as the price in the market changes too, and it'll shift that whole shaded area around that shows you the probability on there. Did somebody just sign out? No? Okay. Okay. So that's kind of an interesting new feature that comes along with doing the earnings. So I was looking at this one, and I went to the probability analysis. That's what made me think of that. And of course, on this one, it's not going to make a difference because IBB is an ETF. So there are no earnings, so that's not going to change anything. But I switched to the what probability did I use? Oops. I think I used the 30 or 34. And then, I kind of didn't like, what I really didn't like about it was this theta to vega ratio. There's too much risk of, this thing going down and the volatility going up. I don't make enough on the theta to pay for that, and it's kind of a little bit too much delta for me. So I compared it to a put ratio, 210, 215, 10 of those, and actually I got 70 cents for it. And then shift back to that. Well, what did I use? I don't remember now. 30. Okay. So even though the short put has slightly better or much better expected return, this one has a better. It was actually better this morning. Better theta to vega ratio, and when you do the put ratio, if the thing starts going down and the volatility of the long option goes up, it actually kind of helps hedge your delta risk and your vega risk too. So I like that better than just a straight short put or a vertical spread. The vertical spread, you get an absolute bottom on the what you can lose, but if it starts going down, it doesn't mark very well because the volatility on the short option is much higher, or the vega on the short option is much higher than the vega on the long option. So just a little my 2 cents on comparing these things. Okay, well, I guess if no one has any more questions, so who wanted to do the beta?
I do, Alexis.
Alexis, okay. And oh, Lee went offline. What happened to Lee? That's what the noise was. I'll contact him later. Okay, so and then Yuri, I'll copy those starter filters to your account, and
Thank you.
next time you open it, you should see them all there.
Thank you.
Okay.
Yeah, thank you.
Okay. All right. Well, thank you for coming, everyone. And
Thanks to you.
I'm actually going to schedule some workshops on using the volatility study. So I'll go more into the using the bubbles and other things that you can do from there. So those will be coming up in the next few weeks. Okay.
Craig, can I ask maybe a ridiculous question, but I'm new to options.
Sure.
When I analyze calendar spreads, you have a different expected return if you look at the first list, or if you click on
this top one right here.
Yeah, you have a different. Well, I saw many times a different expected return than of the one that you get if you go into the spread
Right.
analysis.
Okay. Yeah. There are a lot of reasons for that.
Okay.
So the first one is and the biggest reason is which volatility is used to calculate the expected return. And Alexis, actually, there's on the Option Workbench website, there's a video presentation that I did that has a lot of information about expected value and expected return and what goes into the calculation. I also wrote a paper, so let me know if you want that, and I'll send it to you. But
Oh, wow.
In order to calculate the probabilities, you have to make some kind of volatility assumption. Okay, so now on the strategy zone for the calendar spreads, the composite implied volatility is used to calculate that expected return, that expected profit. So when you click on this and Option Workbench, you open it in the spread analysis. Option Workbench tries to give you a conservative an estimate of your risk as possible. Okay, so this is a different expected return. I didn't check. Do you remember what it was on the calendars? Let's take a look. I forgot to look. Okay, so this had 4.7% or 68.7 annualized. Okay, and then I've got 10.98% or 38.7 annualized. Okay, so what Option Workbench does is it looks, since this is a short gamma position, which means that it benefits from a low realized volatility environment for the underlying, it's going to pick the highest of the 20, 50, and 100-day implied volatilities, okay, which in this case is 54%. All right. Now, it just so happens that the composite IV is a little bit higher than that, 55.8, which is why you get a slightly better expected return in here than you do on the strategy zone. Okay, so if I were to go in and put in the 55.8, okay, So now I get a little bit lower return, but not exactly the same as the strategy zone either. Okay, now that's because on the strategy zone, uh, in order to calculate the expected profit and expected return, you calculate the profit of the position over some range of prices of the underlying. And in both cases, we use -3 to +3 standard deviations. And then for some interval in between, you calculate the price and assign a probability to it. So in Option Workbench, it uses uh, a smaller interval and consequently more prices in between to do the calculation. So you get a slightly different expected profit and expected return. Okay.
Okay.
All right. And then another reason that the return would be different is, for instance, in the case of a calendar spread, it's going to calculate the return based on the total cost, which in this case is $3.21 on the per spread. Option Workbench uses this expected risk number, which takes into account the volatility to make an estimate of a worst case scenario. Given the volatility assumption, I wouldn't expect to lose the full $3.21. I would only expect on a worst case scenario to lose $3 and 2.01 cents on the trade. So that's going to give it a slightly higher expected return because it's the expected profit divided by the risk. Okay, so there are all these little subtleties that go into it.
Thank you.
Okay, does that make sense?
Yes, indeed.
Okay, good.
Thank you very much.
You're welcome. Okay, then on that note, I guess I'll sign off, and I hope to see you guys at a future workshop. Thank you for coming.
Thank you. Good luck tomorrow.
Thank you.
Hi, Craig.
Thanks.
We got disconnected at the end, so.
Oh, is that Lee?
Yeah, my internet connection dropped, so I was off for a few minutes. But
okay.
Good thing you're recording it. I'll just go back and look at the end.
Right. That's why I do it. Okay. Did you have any questions before I?
No, looks nice.
Okay.
Good work.
All right. Thank you.
All right. Take care.
Talk to you soon.
Bye.
Bye.
Bye.